Good, everyone? I'm back with the second portion or the second half of the Jeanius Algo tutorial. Right now, I'll be going over the Jeanius Screener. I've already did a video on the Jeanius Indicator, so you can pretty much check that out on our page or check it out somewhere in the description below. So with the Jeanius Screener, it works in conjunction with the indicator. So if you haven't watched the other video, the indicator pretty much allows you to build out whatever your strategy is, and it alerts through combinations or just singular alerts, whether you just want to focus on liquidity sweeps or demand touches or supply or resistance rejects or anything along those lines, or even trend line breaks or trend line bounces, whether that's in the uptrend or a downtrend. So that would show up down here at the bottom right. So this would be the check boxes for the indicator. Right now, the only thing I have turned on for the indicator is the short-term trend, because I want to start focusing on the short-term trend first, and then I'll work my way up to more confluences just to kind of show you how I locate my trades from a higher time frame basis to a lower time frame basis. So if you know anything about trading, then you would know that the most important thing when you're approaching the chart is understanding what structure is, which is why the first thing that I turned on with the screener and the indicator is short-term structure. I'm going to also turn on long-term structure while I'm at it, just to kind of get you guys to understand how important it is to follow the trend when you're trading. Now, you don't have to do it this way, but this is just for example's sake to help everybody understand exactly how this thing works. And while we're using the screener, I'll only be focusing on SPY and the Mag 7. So that's SPY, Apple, Amazon, Google, Microsoft, Meta, Tesla, and NVIDIA. And you can also put other tickers in here. It doesn't really have to be stocks. You know, you can put something like US 30. You can put something like a forex pair like Euro USD. So you don't really have to, it doesn't have to be stocks itself. You can just put whatever you want, whatever tickers or whatever tickers that the TradingView platform offers, those can be screened. So don't worry about whether you're a stock trader or a forex trader or a futures trader. You can use the indicator and the screener. So back to what I was saying, right now you just saw me change the indicators parameters to short-term and long-term. And the reason why I like to use the short-term and long-term trend is because, as you can see here, which you can see on these red vertical lines, I went ahead and put these lines ahead of time to just kind of show you guys that at each point of these lines, the structure changed on the higher time frame, or should I, not really the higher time frame, but the long-term trend. The long-term trend is different on each chart. So the 5-minute long-term trend and the 4-hour long-term trend and the daily long-term trend would be two different levels. So that's something that you just want to play around with. I've learned that what works for me is not really using the long-term trend on higher time frames, because more times than not, the short-term trend on a higher time frame is pretty much better to keep up with the signals that I need to pop up, whether I'm in a downtrend and I need those sell signals to pop up, or whether I'm in an uptrend and I need those buy signals to pop up. But I want to show you guys how important it is, if you do have both on, that you would get even more crispy signals if you have both of those parameters turned on. But for the most part, I don't like to use the long-term trend on higher time frames. But for the sake of this example, I purposely started at the top of 2022 because 2022 was a bearish year, and it showed how we were pretty much in a downtrend the whole year, and it showed the changing trends to the downside. And just in hindsight, we're able to see how we would have used the screener to not only follow SPY, but to also follow the Mag 7 and whatever other stocks that you wanted to follow, or whatever other tickers that you wanted to follow, as you use the screener and the indicator together. The point of the indicator is, once again, get those buy and sell signals as a combo while adding those confluences together. You would get those buy and sell signals on the chart. The screener itself is to allow you to focus on one chart and also get the other signals on other charts inside the screener. So that means that you wouldn't have to sit and watch the other Mag 7. You might just be watching the 4-hour chart on SPY, and you could take a look down and just see which other tickers are also giving sell signals. So let's just start out with how I have the screener set up. So like I said, you can start with the short-term trend, starting with the table, which is this table here, giving you those signals on other tickers. You can decide where you want to put the tables at. I like to use my table at the bottom left, simply because, obviously, I like to see a lot of open action up here up top. And more times than not, you're reading from left to right anyway, so you don't want anything kind of in your way. I also use extended hours. So right now you can see some post-market, pre-market activity on this specific chart because of the fact that I have extended hours on. This chart will look completely different if I actually turn it on regular hours, which I won't do. The signal threshold is, again, basically the proximity percentage that it would give you how close you are to that signal. So I say that it's important to kind of leave it at 0, because if you kind of put this out any further, it would pretty much make it, I won't say it would make it more difficult to get that signal, but it would push you further back in distance from getting that signal, whereas this is like kind of right on the dot of where that signal happens, versus you're trying to make it less sensitive by turning this percentage up. So the next thing is wait for close. This is the most important one, I think, because when it comes to getting these signals, I honestly don't like to use the wait for close, because of the fact that, let's say that a certain day begins and a sell signal starts to happen somewhere up in these areas, depending on if I have my liquidity sweep on. When that sell signal comes on, it doesn't wait until that candle closes. It immediately gives those sell signals here as well as here, because I have wait for close off. And so as soon as that candle starts, kind of like, let's say this candle here, kind of like this candle here, as soon as this candle here starts and it causes this sweep here, and this sell starts here, when this sell starts to happen, even if there's a sell signal here, it's going to give that signal despite this candle closing. Now that could be dangerous, because you could get a sell signal and pretty much the candle could just flip bullish. Obviously, you know how that goes. But the thing is, that signal starting from the beginning would allow me to drop down to a smaller time frame to watch for a change of structure on a smaller time frame, and then just trade with the trend on a smaller time frame. Because even this little trend here could have been used on a smaller time frame, where I would be using the long-term and short-term trend in confluence or combination with other parameters, and I could get some really crispy sales going down from this 4-hour chart, maybe somewhere on the 2-minute, 5-minute chart, which is how I actually trade. But I would want this sales signal to happen here to kind of basically inform me to scale down, to just wait for that change of structure on a smaller time frame and just trade with the trend to the downside. Next up is the time frame. So with the screener, you want to make sure that you have the time frame correct. You don't want to set it too far back, because obviously it causes the screener to lag a bit, especially when you're adding information that you don't really need. So if you're on a 15-minute chart, you don't need information all the way in 2016. And on top of that, the screener most likely is going to struggle to collect most of that data in a timely manner. So if you're on a smaller time frame, you want to adjust the time to somewhere closer, maybe the same year, same month, on those very small time frames, so that the screener could pretty much work more fluidly and you would have like less lag. For right now, I'm on the higher time frame, so I can kind of scale up a little bit more. I don't really have to be in 2016. I can actually be in 2020. I don't have to be in 2016. I'll go 2019 because I want the full structure. So next up is the screener tickers. So once again, I'm only going to tap on the Max 7 and SPY, but you can also tap on at least 25 of your favorite stocks or whatever on your watch list. Just say if you come up with a watch list every week, every month, you can just add those tickers to your watch list. You don't have to have anything stopped and just wait for those signals to happen. So it's like automating your strategy where you don't even have to trade anymore. You could just mark up your charts, look up whatever trend is forming or coming up, and just pretty much put your tickers in there and just wait for the signal to come up. And I'll kind of show you guys how that works out as I'm on this chart, as I'm going along, and then you can kind of see the tickers start to pop up telling you when to buy or sell here on other charts that you're not even on. Next up is the supply and demand, which I'll add later on. But the supply and demand is basically a rule-based system where you can either use it as a support and resistance, or you can use it as a supply and demand, and you can have different rules about how you want to acknowledge your supply, your demand. So the one that I like to use is a pivot from high to low, which is, let's say that if this was a demand here, if this was deemed a demand here from this low, then this pivot from this candle's high to this candle's low would be the entire demand. Same thing if I was to do a pivot to close. A pivot to close would be a pivot from this low to where the candle closed, or really not this low, sorry. A pivot between this candle and this candle's low. And then you have a pivot to the next candle's high or the next candle's low. So you would pivot from this candle's low all the way to this candle's high, which is you will be pivoting to the next candle. So if it's a bullish, if it's a bearish candle, you will be pivoting to the next candle's high. That would determine that this was the demand itself. And the last one is the pivot to the next candle's close. So basically a pivot from here to this candle's close, which is kind of right here, which is pretty much the same as the high. They're both very close to each other on this specific example, but you kind of get what I'm trying to say. The level break rule, usually if I'm looking at a support or resistance or a supply demand, in order to deem that a demand or support level or supply or resistance level is actually fully broken, I like to do an entire candle close above that level. So I need an entire candle, big or small, to close above a specific level to determine that that level was pretty much broken. Kind of like here, where you can kind of see where the change of character was loading up as candles were forming at this level, and then the change of character on the short term to the downside actually happened at this candle here, as you can see where the dotted line stopped. And this small candle here closing below this level here basically confirmed that there was officially a change of character to the downside, which is a change of structure or a change of direction to the downside on the short-term trend. And that's another thing as well, understanding that the short-term trend and long-term trends are pretty much separated by solid and dotted lines or dashed lines. So this solid line here, this solid change of character here was a solid change in the long-term trend. So that means that the long-term trend is now in effect to the downside. Same thing here. You have the change of character that happened on the short term right before the change of character happened on the long-term trend. And once again, when you get both of these trends to be aligned with each other, you can get some really strong sales signals. So you can only imagine that after this strong change of character happened, which has happened on the long-term trend, then you could assume that when this short-term change of trend happened here, that these were some good sales going down into here, because now the higher time frame is now fully aligned with the lower time frame. So every sale after this point here, after this sweep happened here, I'm pretty sure once you see the examples, you'll be able to see what I mean. Once these sweeps happen, then you can kind of, basically assume, but also wait for signals on smaller time frames. If you have signals set on smaller time frames, you can see that those signals would be more crispy or really effective or accurate to the downside because everything is in alignment versus, you know, having a long-term trend to the downside, but then taking a short-term long to the upside, which you can do. I mean, people are reversal traders. You can do that, but just understand where you should be selling using a higher time frame signal to the downside. So if I was going in the opposite direction of the long-term trend, which sometimes I do, then I also note that if I get a signal on the daily, weekly that happens to the downside, then I know for a fact that I should be exiting this long in the short term and getting ready to be in alignment and go short in the short term and long term in alignment with each other. Hopefully that makes some sense. The next thing is if you want the screener to also give you a demand test or a supply test. Now, once again, I only use demand and supply and maybe a liquidity sweep, and I'll mix in some moving average crossovers, kind of like a what's the word? What's the phrase? Golden zone. I mean, no, not golden zone. That's Fibonacci. When the moving averages crossover, that is called death cross. So you got the golden cross. I was close. You got the golden cross and you got the death cross. So in the golden cross and death cross, and this is just me going on a tangent for the people that don't know. A golden cross and a death cross is when a higher time, not higher time frame, but a higher or a larger moving average is pretty much crossed with a smaller moving average. So most times people pay attention to the 50 and the 200 for whatever reason, but you can use the 50 and 100, you can use the 21 and the 50. It's the same. It's just a golden cross, it's a death cross. But for the most part, the 50 and the 200 are used the most throughout the trading world or throughout the investing world when it comes to stock charts or charts in general. So right now you see the 50 moving average crossing below the 200. This would be your death cross. This would signify that the trend is now its strongest to the downside due to the fact that this 50 is crossing below this 200. So that means that with the 50 below the 200, trending below the 200, you should be setting yourself up for sales. Obviously, this was a pullback from here. You know, if you wanted to use a Fibonacci retracement, you could have done that as well, but I'm not going to get into that. But basically, once this 50 started trending below this 200 moving average, you know, you could have marked out your zone, which was here where it traded sideways at this level, and then waited for that break and retest to the downside right up under this 50. That would have been an extra added piece of confluence, which I'll show you how to also add that to the screener. And so that way, once all of these things will be added to the screener, you'll get some really, really good sales signals. But yeah, that was just a quick tangent. So next is trend lines. You can also add trend lines to the screener. I don't like to use trend lines using the screener because the thing about the screener is the screener doesn't give you individual alerts within this chart, due to the fact that this chart is for confluences on other tickers. So whatever confluences I have on my indicator, I make sure those confluences align also on my screener, so that if I'm paying attention to one stock and I'm looking for my strat using my indicator, then I would also be making sure that that same combination is input on my screener and it's showing me those confluences pop up as one. So that means that if those confluences aren't popping up as one, that specific ticker will not pop up down here. Now, maybe the tickers that do show it will, but if the ticker is not showing it, then it won't pop up at all. So the only reason you're actually seeing what you're seeing here is due to the fact that that there are signals showing where this Apple is short term and is short term bearish, but then SPY is short term bullish. But as you see, once I start to add these confluences, you will see some of these not even pop up until all of those things happen at one time. So I guess that's a good thing to keep you from being distracted. But I feel like if you do feel that it's important to maybe pay attention to singular things here and there, then you can, kind of adjust where you can kind of adjust it to where your screener only gives you something specific and your indicator gives you something different. But this is the beauty of using the Jeanius Algo. These two things work in confluence with whatever your strategy is. Then, I mean, obviously, it's going to bring you more success. But I'm just showing how I approach the charts using the indicator and the screener. But whatever you do to mix it up or to align with whatever your personality is, that's fine with me because it's fine with you. So, but back to the example of adding these confluences in. So right now I'm going to add the long-term trend to the chart just so I can get some alignment with here so you can kind of see what I'm talking about. So now I'm telling the screener that I want the short-term and the long-term trend to be aligned, bullish and bearish. So I'll just wait for this to load up. And while it's loading up, I'll slide back up here to kind of basically go back through the trend. So if you want uptrend signals, once again, be understanding that just because you have this uptrend signal on, it might not pop up depending on what you have in confluence with it. So if you have an uptrend and then you have a demand bounce or demand breaking or supply breaking retest or resistance breaking retest, you have to understand that these things have to happen at one time. If these things don't happen at the same time, you will not get a signal for an uptrend unless you simply only have the uptrend. The last two things, or the last three things, well, I don't have to go over structure because I've already aligned that one, which I also put where my candle break rule is. But the gap fill rule. So if you're a bullish or bearish fair value gap trader, or for my ICT people, if you do worry about the fair value gap, then you can also put the fair value gap in your confluence. But just make sure that if you're adding, the more stuff you add to this screener, the less signals you're most likely going to get, because it's extremely rare to add all of these things at one time and they all pop up on the chart at one time. So this is something that you're just going to have to play with and go back and forth with to figure out which combinations are the best to wait on, and the ones that work for you in accordance to whatever your strategy is, or your risk tolerance, or your patience level, or whatever. You can also turn on, which is my favorite, the liquidity suite, which is once again, which I kind of explained it in the last video. Liquidity is a play on words due to Justin Larkin, which is the creator of this algorithm. Justin Larkin is pretty much a liquidity trader, and we kind of, agreed that his name should pretty much be the play on words for a liquidity sweep. So now we call it a liquidity sweep. So from now on, when y'all talk about liquidity, you say liquidity, say it the right way. But yeah, so the buy liquidity and the sell liquidity are very important for me. Also, untested lows or untested highs. These could be used on the indicator to kind of mark out untested areas as take profit areas or stop loss areas. But I wouldn't recommend that you use untested lows or untested highs as a signal itself for the screener, unless you find a combination that works in usage with the untested low or untested high. Then I guess that would be pretty cool. I would love to see everybody's combinations and things of that nature as time go on, just to kind of see how people are mixing it up when they're using the indicator. And for the sake of this example, I'm gonna go ahead and add on this golden cross as well, and the depth cross. I'm gonna add on both of those. No, I'm gonna wait. That'll be the last confluence that we'll add. I'll wait. But let me go ahead and add the I'm on the indicator, by the way, if you're paying attention. I'm gonna go ahead and add the demand test and supply test So once again, the demand test and supply test is just saying when that area is tested by price, you will get a signal. Now, you could also say if that area is broken, I wouldn't do that at the exact same time, because why would you do a test and a break at the same time? Also note that these two signals are opposite of each other because they can get tricky. So that means that when a demand break and retest happens, this is actually a bearish signal. So that means that a demand was broken to the downside and a test was happened below it. Same thing here. If a supply was broken to the upside, that means that a test happened above it. So these two are basically opposite of each other. So if you click this on, this is actually going to represent the long side. And if you click this on, this is going to actually represent the short side. That should definitely be very helpful. Also, let me slide back up here to the top of the make sure this is on. Okay, demand. All right, let me turn the same thing on the screener so we can see what else is happening on other tickers right now. This is just the ticker that I'm on, which is 5, but let's see if any other tickers are giving any signals with these same combinations. And while we're waiting for this to load up, I also want you to see something else that's really cool. The screener also allows you to, and the indicator does it as well, it allows you to get signals on timeframes of your interest. So even if I'm on the 4-hour right now, and let's say no matter what time frame I'm on my current chart, I can always set each signal to each ticker to give me signals for that specific chart. Because let's say that one chart is in an uptrend and one chart is in a downtrend on that specific chart itself. So let's say Apple's overall trend right now is trending down, which it is kind of bearish right now. And let's say that SPY is up. On the 4-hour though, I would want to make sure I set these to stay on the 4-hour, only because if I kept it on chart and I went down to, you know, the 1-hour, 30-minute, then technically that trend, these parameters would be adjusted for that specific chart. And that would be, I don't say it would be dangerous. That's the wrong word to use. But I guess it would cause some level of confusion, being that if your most important chart, the most important chart that you're waiting on, should be the one that you're most focused on. Now, you don't have to do it this way, but this is something that I found that works for me, where I kind of mixed it up. And even if you wanted to, you know, let's say you wanted to add the same exact ticker, which I'm not gonna do, but just giving you guys some ideas. Let's say if you wanted to add another SPY and Amazon, let's say you wanted to add these same 8 tickers right below here, and you add in these same tickers here right below here, and let's say you wanted them to focus on the specific chart that you're on, but you also want them to focus on the important chart that you're on, or the entry chart that you're on, or not really the entry chart, but let's say you want them to focus on the structural chart that you're really focused on, and not really on a smaller time frame where you're getting false signals against the trend that you're actually focused on. So if I'm focused on the 4-hour and I'm going down to the 15-minute to find entries, I don't want to be distracted with 15-minute noise and be getting a bunch of sporadic signals on the 15-minute, when I could just, you know, have it slowly moving with the 4-hour here on my screener, so my screener signals. Okay, so right now I have an error, so this is good for teaching purposes as well, to kind of figure out why the error was given. Try to adjust my time frame. So a lot of times when I get errors, I try to remove it real quick and just backspace it and just add it on, just to kind of see if it pops up. I mean, see if it calibrates to the chart itself. Also, you notice there aren't really any signals that are given, even though I have combinations here. The reason this happened is because I need all of these to be combined together. So what I'll do is I'll click on combine all check signals for buy and sells so that they can pop up on the chart itself. I'm also going to set this to the same time frame. So if you notice that these are a lot of demand and supply signals that I'm given. So if I wanted to clean this up, I would add another piece of confluence. What I'm doing on the screener is I'm making sure that everything that I have here is also on the screener as well. So this is somewhat a little bit more clean. So one gem I want to give you guys is something I've learned from using this indicator is that depending on what price is, especially when these moving averages are sideways like this, you know, if I turn every last one of these on, you can obviously see that there's some level of consolidation here. Even in a wider sense, the chart is sideways. And really, you don't need all these to understand that. You can just kind of get a good gist of that just by seeing price action itself and understanding where the 200 is moving towards. So that's the reason why it gets a lot confusing here, where you're getting these buy signals in weird areas like here at a short area, or even getting buy signals to this downside or to this downside. So this is when you start going in and start cleaning up the chart itself to try to figure out what combinations would work to help the chart clean up even further. So right now the screener is back up, and you can see that the only thing that's popping up with the combination between liquidity sweeps and support and resistance is meta. And it's also showing that the trend is also in alignment to the upside. So if I went to meta's chart, you should be able to see that that trend should be showing a buy signal to the upside on the 4-hour chart. Another thing that I've always noticed is that in an uptrend, even though, like I said, this is consolidation, so those buy signals, being that you only have buy signals in an uptrend, those buy signals would be coming in a way that doesn't align with the trend towards this area here. But usually when these buy signals are stacking up to this side and they start to level off, kind of like here where it started to level off, and then you get this buy signal up here, which is higher than this one, this could also help with a change of trend as well. So this will also help signify a change of trend. Now, obviously, you wouldn't just lean fully on the indicator. You would use this indicator as a alert zone, alert area, and then you kind of also pay attention to price action to make sure price action aligns with what the indicator is telling you. So that means that if I get a buy signal on a 4-hour, at any point down here, knowing that this was a pullback, then I would turn to figure out where is it in structure. Maybe this high here was also part of that pullback, or I'll go to, look at my MACD or my RSI stochastic to see if they're overbought or oversold or anything like that, just to add to those confluences. And then I will also drop to lower time frames to not just take a buy, but to also see if there's some level or some form of structural change on the lower time frame. But let me go back to SPY. So once again, let's make sure that golden cross is popping up. So we have 3 and 4, which are here. So this is basically telling me that when the 50 is greater than the 4-hour, when the 50 is greater than the 200 moving average, I should be looking for buys in confluence with all the other buys. Same thing here. This is saying that when the 50 is less than the 200 moving average, I should be looking for sales. So this should just help you with that golden cross situation. And if you want a stronger trend, you could also, acknowledge that you might also want the 21 to be below the 50 as well. You might also want the 21 to be below the 50, so you can make sure that maybe that 2 is greater than the 3. And this is just you adding more and more confluence to fine-tune the chart itself. So you just do this as much as you need to figure out how you would go about doing this. And once again, the same thing you do on the indicator, you want to make sure you do on the trend, because remember, this is your strategy. Whatever the confluences are, this is your strategy. So you want to make sure that your strategy is popping up not only on the exact chart that you're on, but you want to make sure that your strat or your combinations are popping up on the screener as well, so that you don't have to think as much anymore. When you see these tickers pop up with a buy or sell, you shouldn't be thinking. You should just be going to that chart and looking for areas of interest to get in that specific direction that the indicator is showing you, by acknowledging price action and structure. So what do we have combined now? Sweeps, demands, long-term, short-term, 21 and 50. So I'll make sure I turn all these on the screener as well, and make sure that it's the same thing. So 2 over 3. And 3 over 4. Or 3 less than 4. So these are your death crosses and golden crosses that you've now also added in. All right, so remember when I told you across higher time frames that you would miss out on a lot of signals unless there was some type of continuity. So even though this may have been a sale here where there was a retest here and maybe a liquidity sweep, even though there was possible sales here, you didn't get the sale here until the change of structure happened on the long-term and the short-term trend on this higher time frame. So you will want to make sure that that's also happening on other tickers as well. Now that I have these moving averages, unless you just need to see the moving averages, now that I have the moving averages added to this, you kind of don't have to worry about you kind of don't really have to worry about putting the moving average on your chart unless you just want to. Okay, so here's another good example. What you're seeing right here is absolutely nothing. That means that these combinations aren't popping up on any chart, which is interesting. Do I have something wrong? Oh, I do have something wrong, but I noticed that. Okay, so the reason you're not seeing anything here on SPY is because of the fact that there's no combo at all. A combo means that they all have to align. So remember I said that they all need to align to have a good combo or to have an actual combo. Right now, even though everything else is showing green, I need the liquidity sweep or the liquidity sweep for the sell side liquidity to be swept to align. Once I get sell side liquidity here and I get a full green with the combo light, then obviously it should pop up right here on the screener itself. Now, once again, you don't really have to fully rely on everything being a combo. I mean, obviously right now you can just literally look down here and say, okay, cool, the long-term and short-term trends are up. So you can still be focused on, you know, those buy opportunities. But for me personally, I would need you to prefer to wait for that signal itself. Okay, so real quick, let me just show you how this looks in real time. If I'm at the beginning of 2020, at the beginning of 2022, when we have that bullish year right before in 2021, and then 2022 starts to become bearish, and you'll kind of see here where 2022 started to become bearish. Now, one thing you have to note is that once again, this sell still didn't come in until here. So that means that that golden cross or that death cross doesn't happen until you start getting signals. So anywhere where you don't see signals, even if there was some change in structure, you wouldn't get a combination until all of these things are combined with each other in whatever ticker. So it could be different on another chart. It might just not be here, but it could be the case on another chart. We'll see. Okay, so first we'll go back to when the trend changed. Let me remove some things because I need it to be more fluid. I'll give this some time and I'll pause the video and kind of just wait for it to pull up. All right, so we're back, and right now, before we start, you kind of see that SPY was in this range area here at the beginning of 2020 or going into 2022 here. I remember 2022 was a bearish year, so I'll just mark out this range and just make note of what you're seeing on the chart, what you're seeing on the indicator, and what other tickers on the Mag 7, and even if there were the more tickers down here, just imagine how these tickers would just be randomly popping up as time goes on, as structure is changing, and just pay attention to how cool that would be, and visualize being able to be in the moment in 2022, and the precision that you would have been able to trade to the downside, knowing the overall trend and seeing these other tickers popping up and pretty much automating that bias and those abilities to enter at the right moments. And I'm gonna speed this part of the video up for the simple fact that this takes a little time due to the fact that there's so many other windows and other things opened up. So it takes a little time. So I'm gonna speed this part up. All right, so I think that's pretty much good enough. Hopefully it stops sometime soon. But I think that's good enough to kind of see what the example that I was trying to get to. So before I wrap it up, I just want you to see how at this time frame here during February 2022, that's when we finally started to get a good sell to the downside, a good strong sell to the downside on this 4-hour chart on all the tickers. So if you notice, by the time price started to come back down this way, more tickers started to pop up outside of Tesla. Now, obviously, you could have had more sell signals earlier on, depending on if you had less confluences. Maybe you wanted to just have short-term structure. Now, if I would have maybe just had short-term structure on here only, then once this level here was broken here, when the short-term structure changed at this dotted line here or this dashed line here, then obviously everything was to the short side after this point here. Because remember, we're looking at SPY. So SPY obviously is a representation of the market as a whole. So obviously when SPY is leaning more bullish, then more times than not, everything else, or the Mag 7 and the other tickers that help lead the market will also start to look bullish, which is why when you saw this change of structure happen to the upside, which is what this dotted vertical line is marked out for, there's a change in structure on the long-term side on the 4-hour chart. So there'll be another change in structure here to the downside, and you should also start seeing more tickers lean more bearish once it gets to this point here. But right now, the long term is up, but the short term is down. So if I just only had the short term up, you would have got sell signals in this area as well after the break above this point here. The structural change haven't happened yet, but notice that even though the structural change hasn't happened on SPY yet, notice how Microsoft and Tesla, Tesla's twice, I didn't realize that, Nvidia's twice as well, I did not realize that, but just notice how these are also bearish as well. And then now you have Google coming in, and don't forget that you could specify these on a specific time frame, even if you're watching another time frame, which is telling you here on this bottom side to each ticker within the symbol column. It'll tell you what time frame you're focused on. So if you just focus on the 4-hour set for Tesla to just focus on the 4-hour, it will tell you that here. So right now everything just flipped bearish, and now you kind of see everything's turning red here. So that will kind of give you an indicator on each of these stocks to start looking for sell signals. So let me go ahead and click off of this. And using these same parameters, I'll go through the Mag 7 just really quickly to kind of show you where those sell signals started to come in at. What date was this? This was January the 20th and March the 30th, 2022. Okay. To wrap things up, I want to just look at what happened during these time frames. So that January the 20th, 2022 time frame, when the overall structure, the long-term structure at the beginning of 2022 changed to the downside, and then that's when we started getting our sales going down on the SPY. So I want to look at what happened on the tickers like Google, Meta, Microsoft, Tesla, and Nvidia, where it was kind of flipping bullish and bearish, and you saw all of them turn red at that one point. And just see what was happening around those times, especially during that May 5th and July the 22nd date, which is be somewhere between I think here and here, where that trend to the long-term side changed back bearish again after forming this double top right here. Now, obviously, if you only had short-term on and you just didn't focus on the long-term trend, this was actually a good downtrend where you had some good sales come in. That, as you can see, the structure changed here on the short-term side and kept coming down. So if I turned this on, you actually would have been able to kind of see that short-term trend to the downside. You would get signals for that. So that's another reason why on higher time frames, I really don't have a long-term trend toggled on, but I do make sure that I look where the long-term trend is. So the smart money concepts still show on the chart, even if you don't have the alerts set with the long-term trend included. So it is something to just kind of keep in mind, where you know, just figure out whatever combinations you want to choose. But let's look at those other tickers between that time frame real quick before we wrap the video up. Swipe everything. Okay. So you had remember I told you, whenever the market is sideways like this, you won't get a bunch of sporadic signals. You'll get a bunch of sporadic signals. The reason this happens is because I don't trade in ranges. So my combinations are built for trends. That's why every time you see a clean trend starts to happen, that's when you start to see the best signals, because I trade with the trend. Now, if you wanted to trade, within the zone, then just take the structure off completely and just focus on the sweeps on these trends as they start. Go to smaller time frames and then turn on those trends, long-term, short-term on a smaller time frame. That way you can get a good gist of how to ride this small trend up, because on a 5-minute, 15-minute, this would actually be a very clean trend with some good buy signals. Same thing here to the short side, but once again, it's in a range, so obviously it's not giving you really good signals within this range until it comes out of this range and starts to get those sales. But yeah, let me not go on a tangent. Here's that January the 20th right here. These sales started to come in, but we were still ranging until here, where you were able to get those clean sale signals here, here, here. So these were some good swings on Google until Google entered this range right here. Same thing here, good swings until it entered the range again. Let's see, Meta, clean the charts. All right, so here's Meta coming into 2022. Here's that January the 20th area right here. Funny how the change of structure on Meta, wow, the long-term trend on structure on Meta actually happened in August 2021, which is well before the year started. So that could have also been a great indicator coming into the year on what the other stocks would do. So that would have been, that would have been pretty cool to kind of foresee that. But yeah, once again, after this long-term structure change, you had some good sales here beforehand, rearranged. And usually when you see these sales stacking upward, or you see buys stacking downward, that is a good indicator that more than likely you're in a range. So figure out what your most recent highs and lows are when it's doing that, and that'll give you your range indicator. So that's just a little cheat code I'll give you guys. But yeah, so once this long-term trend and these short-term trends align, that's when you start to get some clear sales signals here, 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 until the trend changes to the upside. Once again, you can break to a smaller time frame. You can get some clear buy signals on a smaller time frames as well. As you can see, I'm just using what I was seeing while I was on that SPY chart to show you guys how the screener, if it's on at all times, you kind of don't really have to pay so much attention, but obviously you want to be able to flip between the charts just to get a good look at structure and price action. But just for the sake of automation, the screener is definitely very helpful, especially on higher time frames as well. Because obviously, it's the lower you go in time frame, then obviously you know that there's more noise because there are more candles within the larger candles. So if this was a 1-minute chart, then you understand that would be thousands of candles that you would be dealing with, and thousands of signals that would be very annoying to try to keep up with, which is why it's not really good to have the signals built in a certain way on a smaller time frame versus a higher time frame. But yeah, let's see where that overall structure changed. So if you noticed here, this is something very interesting. I'm trying to see exactly where did the long-term structure change for Microsoft. So Microsoft's long-term structure, this is a dotted line, or a dash line. This is interesting. Microsoft's structure didn't even change for the long-term downtrend until May, which is very interesting. Wow. Once again, as you can see, sales are going up. Obviously, that could be some indicator of a range, which is what you got here, which is a range. This will put you ahead of the game when you're learning to just do this in real time, by the way. Obviously, just a quick example to the opposite side, because I haven't been doing any signals to the upside. I've only been focusing on downside signals due to the fact that 2022 was a down year. But if you notice here, where this long-term and short-term structure was to the upside, these were some very clear buys. Once again, it's built to be a part of a trend because I am a trend trader. So yeah. Who's next? Tesla. Should I clear the charts? So let's see where Tesla changed the trend going into 2022. Okay, so the official long-term trend changed around the same time that January the 20th on the on the SPY. Once again, you don't really have to use SPY for reference. You can just kind of just focus on individual stock, but I like to use SPY as reference just from the simple fact that it will allow me to look at the overall market. Now, if I just want to look at the Max 7, opposite of the SPY, then obviously I can look at something like the NASDAQ as well, trying to focus on the tech stock. But as you can see, this was a solid line, which is the long-term trend to the downside on the 4-hour. Don't forget, we're on the 4-hour. So this solid line is subjective to the chart that you're on. But I'm focused on the 4-hour on every chart to have some continuity in the teaching that I'm doing. But yeah, as you can see, once this happened, a bunch of sell signals started to come in. Right after that, triple top, sell, sell, sell. So these were good little sell signals that you could have, whether you could have entered a swing, or if you didn't want to enter a swing, maybe you wanted to, catch this on the day chart and just look for sales going into each day. It could have gave you an indicator for that as well. But yep, for the most part, you can kind of see that following that spot chart and also looking at the screener itself, it will give me some really good indicators on other charts. So that's pretty much how the screener will work. Just looking at NVIDIA real quick. Okay, there's that. January 20th, okay, structure changed, cool. Sideways market, trendy, sell. Okay. But yeah, once again, if I wanted to catch every last one of these trends, I would just go to a smaller time frame. So, just keep all that in mind. If you do want to catch some clear trends, just go to smaller time frames, so you don't have to worry about being faked out by buy signals that are going down. Just make sure you have your structures set accordingly. That means you're not fully relying on the screener or the indicator, but you're using it as a point of reference to always give you that extra edge up. I guarantee you, on a smaller time frame, when this level here is broken, this would have been a change of character to the downside, and these would have been a bunch of sales to the downside. I can almost guarantee that. Matter of fact, I want to test it out before I go. So you saw that it was a bunch of buy signals to the downside. All right, let's adjust this screener for the date of January the 20th, when everything did turn bearish. January 20th. Okay. Indicator as well, so that we can see those signals pop up. And we'll be done after this example. January the 20th. 2022. Okay. So let's drop down to the, let's do the 30-minute, see if that works. Like I said, I don't want to go too low and get false signals. Okay, so as you can see on the smaller time frame, like the 30-minute, where I was getting those buy signals to the downside, the fact that I knew how to mark up charts and mark up structure, I still had a good gist of what I should be looking for. Even if the screener is giving me a certain signal, I'm still able to kind of see that I could leverage some good sales with the fact that this line that I drew out on the higher time frame, which is on the 4-hour, I knew that that was a structural level where there was a higher, that was the last higher low before this lower high was put in here. And even though you couldn't really see it on the 4-hour, when you look at charts for so long, you kind of know. So this was the long, on the 30-minute, this was the long-term structural trend change on the 30-minute. And so on the 30-minute, you also look for short-term trend changes to align together so that those charts would give you more crispy sales. Now, if I wanted to include some sales signals from this downtrend here before the actual long-term trend change, then I would just take long-term off and just keep short-term on myself. But if you can see, I got some really good sales signals. So I wonder what other sales signals would I have gotten on other tickers if I would have marked those up. It was this March. Let me change the screener to something closer. January, February, March. March the 1st. I'm just doing this so that the screener works a little bit faster. Remember, I told you the date of the screener and the date of the indicator works a little bit differently when it comes to fluidity, depending on the time frame. Because the indicator is only looking at signals for that specific chart, whereas the screener is literally collecting data on however many charts you have. So you have to keep that in mind and why it takes so long. So I'm trying to be lenient here and just get it as close as I can. Remember I said that the lower you go in time frame, the closer the date has to be to that specific time frame, so that the screener can actually work more fluidly, and that's not going to collect so much data when it comes to looking through all of these candles on all of these charts at one time. So what is this, the 15th? So let's move it up to the 10th. And let's just see if the screener starts to work a little bit better. Sell. Just imagine being able to catch these sales within this downtrend that we found on the 4-hour chart when those buy signals started coming in towards the downside. And if you notice, those same buy signals come in on this side as well. You can kind of use these green signals on this side as a pullback indicator. So almost like if you see green popping up here, then obviously you wouldn't want to take a sell against this. So you can kind of use that in your advantage to get better entries. So like if I see these greens popping up, I wouldn't take sales until I see all red here. So these would just be cautionary signals if I'm already in a downtrend. But yeah, I'll go ahead and wrap that up. Hopefully you guys enjoyed the second video for the Jeanius Algo, the Jeanius Screener. We'll have more coming for everybody moving forward, but for right now, yeah, this is all we have. And I hope you guys enjoyed it, and like and subscribe. And I'll see you guys later.